Welcome to Align Spotlight, where you meet your manager. Hey Baird family, this is AMR's Jason Cooper, and welcome to Align Spotlight, where you meet your manager. Given the strong growth of Align and its 15-year anniversary, we decided to produce a special episode with one of our PMs, Aaron Benson, to discuss how we curate solutions for you and your clients through the Align strategic portfolios. We hope this episode provides you with a better understanding of our long-term strategic positioning, the importance of actively managed solutions, and our portfolio's edge. Enjoy. Hey, Aaron, thanks for joining us today.
Hey, Jason. You bet. Happy to be here.
Well, Align Strategic just passed some major milestones with a 15-year track record and more than $10 billion in AUM. You've been on the strategy for most of its history, so can you talk about what attracted you to the program and how it's evolved?
Yeah, absolutely. So I actually joined Baird in 2007, right before the financial crisis, and happy to spend the last 10 years with Baird's asset manager research team, which of course is the team managing the Align portfolios. And honestly, it's been a really humbling experience having so many of our advisors and clients trusting us to manage their investments, and that's something that I always think about. So I think the best way to put it, our perspective on the matter may be that we manage Align as if it were our own capital, and actually, technically, a small part of it is our own capital, right? I have my personal account invested in Align, and tangentially related, I recently put my mother-in-law in touch with one of our many, many exceptional financial advisors who ended up investing her account in Align. So maybe that's an even better testament to having skin in the game, if you will. But to your question, anyways, I'd say that what attracted me to Align is largely the quality of the portfolios and the deep research behind all aspects of the investment process. And definitely a big thing for me has always been the direct access that we have to some of the best money managers in the world. Align success, it's given us scale so that we can have that access, and we have one-on-one conversations with the best money managers out there. The likes of Rick Reeder from BlackRock and Bill Nolan from Principal, Paul Black from WCM, and others that fans of our Align Spotlight podcast series have heard from. And to address your second point on how Align has evolved, our process has evolved over time. And from a research standpoint, we're constantly pushing ourselves to go deeper analytically and leveraging new tools and learning from our past experiences. And Align, the platform itself, has also evolved with some new portfolios over time, and all of those are derived from the same underlying philosophy and emphasize strong, consistent long-term results. But lastly, one additional thing I'll mention, and what attracted me to Align is a large part of that is the connections that we have with our really exceptional financial advisors, and being able to deliver results for their clients, and hopefully help strengthen relationships and people's ability to retire or hit other important milestones, and Align, itself hitting that AUM milestone that you mentioned. And it's really just a testament to the great relationships that we have with our advisors and our wonderful clients, and of course the long-term results that we've delivered over time.
Yeah, and the product's longevity is really a testament to, as you said, delivering over a full investment cycle. So what do you think drives long-term success?
Well, the key is maintaining a long-term mindset, first and foremost, and investing accordingly. So a large part of that is sticking with a disciplined investment process and strategic asset allocation. And many studies over time have shown that asset allocation can drive 90% or more of an investor's returns over time. And Align provides globally diversified portfolios, leveraging the same team behind Align's asset allocation that Baird leverages for the firm's capital market assumptions, which are used for financial planning and other asset allocation guidance across all of our private wealth management business. So More recently, we've also had the opportunity to incorporate Strategas research into that process. And Strategas, for those who aren't familiar, is a worldwide leader in macroeconomic research and also a Baird subsidiary. So those strategic asset allocations give us the foundations for long-term success, which may not change on a quarterly or year-over-year basis. I mean, we're not frequently swapping in and out of asset classes, but we're constantly incorporating new information to inform our views and actions, or in many cases, well educated and purposeful inaction. So, just one thing I'll say on that matter is what you won't see us do is messing around with market timing, going in and out of small cap, EM, gold, etc., based on short-term tactical bets. And why, you might ask me, is because it's incredibly hard to get those calls and to get the timing right. And in practice, we just haven't seen anybody who's able to do so consistently and with success. So instead, we're focused on asset classes where a meaningful allocation can improve our risk reward over time.
Yeah, that makes sense, and it's great to highlight the importance of asset allocation. So I guess the question is, why not just go passive, capture that 90 to 95% and call it a day? Why go active?
Yeah, you know what? For many clients, passive makes perfect sense. I'm not gonna to pound on the active management drum and say that everybody has to be active all the time. Passive makes sense for a lot of people for part of their portfolios. And Alliance Strategic, we have hybrid models that essentially split the difference between active and passive for each sleeve, allocating to an ETF for the passive part. And what that does is it reduces expenses while still maintaining potential for some outperformance from active management. But what I think in terms of active passive and the impact of asset allocation, we embrace the importance of asset allocation wholeheartedly, but the way we see it, why stop there? I mean, why settle for 90%? To be honest, we also feel like the idea that the average active manager can't beat their benchmark after fees is correct. I mean, I hate to say it sometimes, but it's hard to beat the benchmark, and the average manager may struggle to do so. But at the same time, we could care less about the average active manager. I mean, average isn't what we're shooting for. In my opinion, too many funds are destined for mediocrity, I mean, handcuffed to overly strict mandates and trying to churn out benchmark like performance year after year. And those funds can be a dime a dozen. But for Line, we're focused on a more elite group of what we feel are truly exceptional investors. And those are the ones, for example, like the managers we've highlighted on this podcast series, those with a tangible edge, if you will, relative to peers. So the edge is important, and some might ask, what does that mean? I mean, how do you define edge? And that's where the art versus science of manager selection really comes into play too, because an edge can be a lot of different things. It can be a key person, your Warren Buffett type portfolio manager that just has a knack for investing. It can be very deep, well-resourced team behind fundamental research. It can be unique aspects to the philosophy or process that drive a fund's performance, but it has to be something tangible, and that has to be tied to performance. So we spend a lot of time finding teams that we feel have an edge, and then even more time once we find them trying to make sure that edge maintains or remains intact over time. But that is really a key point behind our philosophy, because when it comes to manager selection and finding that edge is essential. I mean, otherwise it's incredibly difficult to really separate skill from luck when you're assessing a fund and determine which ones are going to be able to deliver future outperformance. I mean, that brings to mind a recent white paper that we published too on, well, the title is The Unreliability of Past Performance. And as you can gather from the name, it illustrates the fallibility of past performance as an indicator of future success. So, finding that secret sauce or edge, if you will, that can allow an active manager to outperform on a go-forward basis is really absolutely critical.
Yeah, and portfolio construction takes that a step further with Align's asset class sleeves. So, can you say why you use sleeves and how you prevent over diversification, or in other words, diversifying away the alpha?
Yeah, absolutely. That's a really good question. And we use sleeves for targeted exposure to an asset class. And simply put, a sleeve is just a combination of funds that we pair together with complementary investment styles. So the idea behind using a sleeve is that the sleeve itself can really be stronger than the sum of its parts. And we expect every fund in a line to outperform over time, but with the asset class sleeves, we can just capture a wider range of investment styles for more consistent results. So take large cap value, for example. One could just shoot down the fairway with one single, highly diversified, low tracking error fund with, say, 200 to 300 stocks, right? But instead, we have three funds in our sleeve, each with a more unique and distinguished investment style. And one of those is conservative equity income, which tends to provide very strong downside protection in market sell-offs, which is, of course, valuable in years like 2020. One is more contrarian deep value, which is certainly more aggressive and provides higher upside. And that fund can really drive returns on a market rebound. The third is a relative value fund, which tends to lead when value is out of favor, for one, as it has been for much of the last market cycle. And again, we expect each of those funds to outperform over the long run, but that alpha may come at different points in time, different points in the market cycle. One zigs when the other zags, and so on. And also, it's worth noting that in Align, we have a preference for more concentrated funds as well. And we can live with high tracking error from individual funds, and partially because we get to know and understand each of those very, very well with our due diligence process, but also because of that sleeve approach. So there's no magic number for how many funds need to be in a sleeve either, because sometimes we get asked like how is a sleeve just three funds or one or two or four, what's the right number? And in fact, we really only add each fund to a sleeve if the sleeve is stronger as a result. In other words, the question isn't how many funds, but instead it's how can we leverage our highest conviction investment managers to build the strongest possible allocation for each asset class.
You made a point about how important it is to identify an edge with any investment team if you want to be able to, understand the source of their future success. So if you were to look inwards, what is the line's edge?
Yeah, Jason, that's a really good question and something that we ask ourselves all the time. Honestly, I'd say first and foremost, it's the deep research from our entire asset manager research team. The team's experience and asset class expertise is incredibly important, both from the standpoint of asset allocation decisions and also fund selection decisions. And further zeroing in on a critical aspect of our manager selection process, another important part of our edge is our emphasis on people. We feel that active management is really all about people. People drive investment decisions, and those decisions determine fund outperformance or underperformance. So that's why we spend a lot of time getting to know the people behind every single fund in a line extremely well. And that includes on-site reviews where we meet with investment teams on their home turf and spend hours kicking the tires and asking really tough, straightforward, direct questions to help us understand what makes them tick, who's important, and exactly how does that team dynamic work. And we'll continue conducting on-site reviews periodically after we recommend a fund, providing updates for advisors and clients along the way. And we also have quarterly calls with those portfolio managers and analysts to review fund performance and investment decisions and changes. And that interaction and that access, like I mentioned earlier, is incredibly valuable. I mean, I can't overstate how valuable that is to getting deeper beneath the surface and understanding, what really drives a fund's success. So, that's a large part of what allows us to separate skill from luck and allows us to identify those investors that have a real and durable competitive edge. Lastly, like I said earlier, another part of our edge is our long-term discipline and forward-looking mindset. So that means maintaining our discipline process, sticking with it over time, and maintaining a strategic asset allocation and not betting the farm on tactical trades. With a line running strong for 15 plus years, we've had plenty of time to reflect on our experiences, and really we know exactly what we do and do not add value with. So we focus on the areas where we can add the most value. And at the end of the day, that's the reason for our mutual success, which thankfully we've been so fortunate and we're grateful to be able to share with Baird's clients.
Aaron, thank you so much for those comprehensive answers. I think you really shine a light on the depth of research and what goes into portfolio construction. So just want to thank you for your time and looking forward to meeting with you again as we continue to execute some major Align milestones.
Absolutely. It was my pleasure.
Well, what did you think? This is a great episode to share with your clients so they better understand the investment process and philosophy that underlies the Align strategic model portfolios. We appreciate all your feedback as we continue to curate premium content. Are there any other Align managers that you would like to hear from? What additional content can we produce for you? Reach out to AMR and we'll be sure to respond.